3, where I'll be teaching you guys the order block concepts. So let's get straight into it. Order blocks. One of the most important concepts within this strategy is the understanding of order blocks. An order block is an area on the chart where we can clearly identify a large order being placed on the market. You notice the order being placed and then a rapid move away from that area, which usually tends to break structure. The candle before that rapid move is what we identify as our order block. Now these are essentially areas of supply and demand within the markets. So here are two examples of what we would identify as an order block. So as you can see here, this is the last sell candle before a rapid move to the upside. So that sell candle is what would mark out as our order block. Now when we mark out our order block, we mark it out from the open to the close. Yeah. However, I know a couple traders that tend to include the wicks. So whatever you see works best for you when backtesting this strategy, go for that. But me personally, I mark out my open to the close, right? So how we trade it. Once price moves rapidly away, we identify the last candle and we mark it out. We then simply wait for a retracement back to this order block where it would mitigate the open of this sell candle so that we can catch a buy over to the upside. And that's the same for a bearish example. We have a buy candle and then a rapid move to the downside. We then wait for price to pull back and mitigate the open of that buy candle so that we can ride the sell. So let me show you guys live examples. Now in this case over here, we have identified a nice break of structure, right? Now once we identify our break of structure, that is when we start to look for our order block. Once we got that break of structure, we simply look for the last down candle before the rapid move to the upside, which broke structure, right? Now, as you can see, this was the last 4-hour order block right over here. Essentially, you can call it the sell to buy candle. So what we mark out the open and the close, and then we wait for price to pull back. Now, once we got that retracement back to that order block, that is where we get in our entry. So we'll enter here with our stop loss at the close and catch the move over to the upside. Now, a bearish example right over here. We have this was the last low. Price broke through this low, showing a continuation in trend, right? And as you can see, this was a very rapid move right after this last candle. So we would mark out the open to the close, right? Wait for price to pull back to fill in any imbalance and mitigate the open of that candle. As you can see, price pulls back, would have our entry at this area over here and our stop loss at this close. Once we enter here, we then set our TP wherever it was intended to go towards. So I'll personally target this low, or if there was any further imbalance or liquidity that needs to be taken out, I'll target those lows. But the whole point is to understand how we would enter the markets. So that's basically it for order blocks, but I'm just going to go through a quick example with you guys before I move on to lesson 4. Let's just stick to EG, and let me show you. Let me just clear up the chart. Actually, let me go to a fresh one. Euro GBP. There we go. That's a clean one. Now let's head over to that 4-hour. Sweet. Alright, so the trade that I caught was this one right here. Why did I take this trade? Now it's pretty straightforward, right? This was the recent low. That low got broken. And not only that, we had our liquidity down there, right? Now, once we had that break of structure and that liquidity was created, right? And there was a rapid move to the downside right after this bullish candle. Meaning, what I would personally identify as my order block would be this 4-hour. You can call it a buy to sell candle, or you can just call it your bullish order, bearish order block. Now, as you can see, price broke structure, left us some liquidity that needs to be taken out. We then waited for our pullback, and then we got in the pullback right at this area over here. And then what do? We sell off right here, so with a stop loss at the close of the candle, and you can target the liquidity, or in my case, I'll be targeting these lows. Reason being is because if you zoom out, we have all of this imbalance, which I'll be teaching you in lesson 4, but essentially I would like all of this imbalance to be filled in. And now that you lot understand the order block concepts, right? Now, what do we have over here? We have a break of structure, right? Now that we have that break of structure, this would be deemed as our order block, right? So what I would be looking to do is, I'm going to sell currently. I'd like to sell it down to this order block over here to then buy it up again, okay? But that's just the basic concepts of order block. Examples of trading order blocks on a live chart. Now let me actually clear up this chart for you guys, and let's get straight into it. So, how I took this trade and why I took it. Let's ignore that for now. Clear up the chart. So, first things first. Price was in a downtrend, right? Price was creating lower highs, lower lows, and that was our most recent lower high. Okay, so at this area over here is where we got in our break of structure, right? This is where the break of structure happened. So if I write that down, break of structure, and as we can already see, price left us some sweet liquidity, equal highs right up there. That needs to be taken out, right? So now that we got our break of structure and there was liquidity above there, right? And there is all of this imbalance and inefficiency that I'll be teaching you in lesson 4, by the way. But there's all of this inefficiency that needs to be filled in, and this liquidity that needs to be taken out, and this break of structure to show that the buyers are coming into power. So with all of these confluences, that's when I know I should start to look for a buying opportunity. So we got that break of structure. We then look for the last candle before that rapid move which broke structure. And in our case, we can clearly identify this very clean sell to buy candle. Now remember when I told you when identifying buy to sell or sell to buy candles, it's important that the candle is mainly body and minimal wicks. In this case, you can see the candle is mainly body and just a minimal wick up there. So we'll mark out the open, like so, and we'll mark out the close. We'll extend that. Now, once we identified our order block, we then wait for price to pull back into the order block, and then we'll get in our entry. So we would have entered at the open of our order block with our stop loss at the close, and then our TP will be that liquidity all the way up here. So that's an example of a bullish order block. Now I'm going to show you guys one more example of trading Euro USD and identifying bearish examples. So let me go to my chart because I've already marked it out for you guys, so it's easier to explain. There we go. So let me take all of this off. Alright, sweet. So as you can see here, price is printing a series of higher highs, right? And a series of higher lows. Now, as you can see here, that was the most recent higher low. Now, what happened at this point over here? Price broke that structure, right? That was the most recent higher low. But now price broke that structure, creating a lower low. Once we identify that break of structure, what do we then look for? The last candle before that rapid move which broke structure, and in that case would be this very solid buy to sell. We then mark out the open, and then we mark out the close. Just try to be as accurate as I can. There we go. And we'll mark out the close, and then we simply waited for price to pull back so we can sell it off. So we'll enter at the open, have our stop loss at the close, and we can set our TP at that low. Alright, that'll be trade number 1 complete. Now, trade number 2. Once we got that another break of structure, which shows a continuation in trend, yeah, shows that the buyers are still in power. Once we got that break of structure, we look for the last buy candle before that rapid move, which again broke structure. And as we can see here, we identify this candle over here. Now this candle is not a buy to sell, or a sell to buy candle. It's an indecision candle, which marks out an area of supply. Now, when we have a candle that looks like this, where the body is minimal and then the wicks are bigger than the body, we identify that as our indecisive candle. In this case, we'll mark out the wick to the wick, yeah, and we'll enter at the wick. So we'll sell off here. But in an example of an indecision candle, you'd have your stop loss 5 to 10 pips above that zone. So if we mark out 10 pips above this, that would be right over here at 22244. Cool. So we'd have our stop loss at 222. There we go. We'd have our stop loss here, and we'll again target these lows, right? So you'd have gotten 2 trades using these examples. Yeah. So I hope you lot understand the concepts, and I hope it was pretty straightforward with you lot. And again, if you guys have any questions, feel free to directly message me or just message the general chat. I'm sure other students will be there to help as well. Alright guys, I'll see you on lesson 4.